In the world of lending, precision and clarity in financial analysis are paramount. But with vast amounts of borrower data, it's easy for key insights to get lost. That's where decimal point analytics comes in, turning complex financial data into actionable intelligence for lenders. Financial spreading begins with understanding the loan setup, capturing key details that will define the entire lending decision. At DPA, we meticulously collect information such as the finalized loan amount, total exposure, loan terms, tenure, and interest rates. But it's not just about numbers. We also capture the critical aspects of loan purpose, collateral details, and lien positions, which are vital for assessing risk and potential repayment challenges. Next, we focus on the business cash flow, BCF, analysis. Borrowers are typically required to submit 3 years of business tax returns and the most recent interim financials. However, we go beyond the standard documents. For businesses involved in acquisitions, startups, or rapid growth, projected financials are needed to forecast future cash flows and profitability. At DPA, we ensure these projections are handled with precision, enabling lenders to make forward-looking assessments. In addition, we track business debts, categorizing them as installment loans or lines of credit, to understand monthly obligations, balances, and creditor relationships. Personal cash flow analysis is equally important for individual borrowers or business owners. For them, we require 2 years of personal tax returns, W-2 forms, recent pay stubs, and detailed credit reports. But that's not all. To gain a full picture of the borrower's financial standing, we request a personal financial statement, PFS. This statement offers a snapshot of their personal assets, liabilities, and overall net worth, which helps us evaluate their financial stability and ability to meet obligations outside of their business. At DPA, we believe that understanding a borrower's balance sheet is fundamental to assessing their overall financial health. We dive deep into key financial metrics, including tangible net worth, current ratio, and quick ratio. These ratios help evaluate the borrower's liquidity position, how easily they can meet short-term liabilities. Another key metric we focus on is the debt-to-net worth ratio, which helps assess the borrower's overall leverage and financial risk. By analyzing these indicators, we can provide lenders with a clear understanding of the borrower's financial resilience. The real value comes when we conduct a thorough BCF data analysis. At DPA, we examine revenue trends, identifying key patterns that reflect the business's financial performance. We also assess net income as a percentage of sales, ensuring the business is operating efficiently. Any recurring or non-recurring income or expenses are adjusted accordingly to ensure accuracy. From there, we calculate taxes on adjusted pre-tax income, determining the borrower's adjusted net income and adjusted cash flow. But we don't stop there. We also calculate crucial ratios like the Business Debt Service Coverage Ratio, DSCR, which evaluates the business's ability to cover its debt obligations. Finally, we compute the Global DSCR, considering both business and personal cash flows to assess the borrower's total repayment capacity. At Decimal Point Analytics, we do more than just spread numbers. We ensure that each financial decision is backed by accuracy, consistency, and insight. Let us help you transform your data into confidence.